What is going on, everybody? Welcome back to yet another video. In today's video, I'm going to be showing you how to get perfect entries using Fibonacci retracements. If you guys do enjoy these Fibonacci videos, definitely make sure to smash that like button and comment down below letting me know that you guys do want more Fibonacci videos. If you do that, I will make more. While you're at it, make sure to smash that subscribe button. And without further ado, let's hop into the video. Alrighty, so I did end up doing a 1 hour Fibonacci video on this channel, so definitely make sure you guys do check that one out. That link will be down in the description. Make sure you guys watch that video as soon as you are done with this video. But with Fibonacci retracements, essentially what it does is it helps us identify the best possible entry point to get long or get short. So if a stock is uptrending, setting higher highs, higher lows, higher highs, higher lows, Fibonacci retracements can help us identify where this low point can be to then assist us to getting long and potentially catching this entire move up. Same thing right here. Fibonacci retracements can help us identify where this area can be to then help us get long. Now, in a downtrend where a stock is setting lower lows, lower highs, lower lows, lower highs, again, we can use Fibonacci retracements to identify where these pullbacks are going to be to then assist us getting in a short position. So in order to draw your Fibonacci retracements, you need to identify the clearest low point to the clearest high point. Always the lowest point of price action to the highest point of price action before price starts pulling back. So if we're looking at this uptrend scenario, this is the lowest point of price action. This is the highest point of price action. That is where you would draw your Fibonacci retracements, and you would look for a pullback to the 50% or the 61.8. Now, if price pulled back to that area and it confirmed the entry to get long, you would go long with your stop loss slightly below the 61.8. So in an uptrend, you're looking for a bounce at your Fibonacci retracements. To find the bounce, you take the low to the high and then watch price pull back to these areas. Again, you need the confirmation to get long in that scenario. Price action does not confirm, you do not get in the trade. Now, to find a reject point, what you're going to do is you're going to take the highest point of price action down to the lowest point of price action and then look for price to pull back into the 50 or the 61.8 to then get short. So again, high to low, you're looking for a reject. Low to high, you're looking for a bounce. There are other Fibonacci retracement areas that you can use, like the 23.6, the 38.2. The 70.7 is something that I've been using recently. And the 78.6, that's a topic for another video. So again, if you guys want it, make sure to smash that like button. But those are the main Fibonacci retracement areas that I watched, the 50 and the 61.8. Now, on an actual candlestick chart, if we were to say that this is the clearest low to the clearest high right there, we would be looking for price to pull back to the 50 or the 61.8 for a bounce. If this were to be the highest point of price action down to the low right here, you could watch the 50 and the 61.8 for a reject. So I just wanted to show you guys how to actually draw it on a candlestick chart. You always want to take the wick of the candle to the next wick. You don't want to do body to body. That doesn't make sense. You always want to take wick to look for your bounces and rejects. Now, one thing to make note for Fibonacci retracements is you don't want to use them in consolidation. Looking at Boeing over here, what was price doing? It was consolidating. Therefore, you don't want to use Fibonacci retracements. You only want to use Fibonacci retracements when there is a clear trend in the market. So I do want to show you guys a really good example on how you could have gotten a perfect entry using Fibonacci retracements. We can actually look at a trade that I ended up taking where I ended up losing on it and then missed the next trade, which is going to be on SPY. So on Friday, I ended up taking a bounce on SPY. There was 2 different Fibonacci retracements. I didn't see the second one, but the one that I ended up taking, and why I love Fibonacci retracements, because your risk is always so limited. The trade that I ended up taking was from this low to this high right here. As price started pulling back, it started bouncing off the 61.8% retracement, validating the long position with a stop loss literally right below here. So if you ended up getting long at the close of this candle at 425.35, your stop loss was around 425. And then as you see, I mean, that was 35 cents of drawdown in this trade. What was the potential upside from that point? 425.35 all the way up to 426.35. You were risking 35 cents to the downside while your upside was a $1 profit. Now, the trade that I ended up missing, again, this was the one I took, ended up losing out on. That's why I love Fibonacci, because my risk is always so limited. You can take this low point right here in the pre-market. That's the clearest low all the way up to the high point right here. And as we can see, Fibonacci confirm the entry. You can break it down to smaller time frames, 2 minute, 1 minute, 3 minute, whatever it is. But if you broke it down to a 1 minute time frame, you can see price confirm the entry literally at the close of this candle at 424.3. So where was the stop loss? Right below like 423.9 to 423.8. And that was the exact bottom of the day before SPY rocketed all the way up to 428.75 from that entry down there. And then real quick, in case you guys did not know, I do have a 450-page book on Amazon titled The New Age of Technical Analysis. And in this book, I go over my entire day trading and swing trading strategy, how to find bounces, rejects, support and resistance, Fibonacci, all the indicators I use, specific day trading and swing trading setups I look for, and so much more. So if you guys do want to check it out, The New Age of Technical Analysis on Amazon, the link will be down in the description. Again, with Fibonacci, it tells you the exact level to watch for bounces and rejects, therefore giving you almost a perfect entry if you know what to look for. So now what we can do is we can look at Fibonacci examples from the past. Looking at this QQQ example, this was the lowest point of the day all the way up to the highest point of the day. Once price bottomed out right here and started pushing to the upside, you know, okay, that is my low point. As price ended up topping out right here and pulling back, that's when you can draw your Fibonacci retracement from low to high and watch price as it starts pulling back towards the 50 and the 61.8. One thing to make note is if price pulls back to the 50 and confirms, but they're both really tight in price. As you can see, QQQ, the 50 was at 295.30 and the 61.8 was at 295. You can do half your position at the 50% retracement, add the rest of it at the 61.8 if price confirms. In this scenario, both the 50 and 61.8 confirmed entries. So say you got half your position here, the other half right here. Stop loss would be right below that 61.8, again giving you almost a perfect entry on this trade before QQQ continued to push back up into the high points right here. And I actually think it went a lot higher that day. So that's just one example of this. Here's another example on SPY. I ended up taking, I believe it was a higher time frame fib. It might have been a 1 hour pivot high, pivot low, but this was the lowest point right here. And as SPY started pushing up back into the 50% retracement, what ended up happening? Price pushed up into the 50 and then came right back down, confirming the entry to get short. And then from there, price dropped all the way back down pretty much into the low of the day, again giving a perfect entry short. Heading on over to the next example, looking at QQQ as far as a 5-minute fib, taking the pivot low to pivot high right here. Price ended up pulling back down to the downside, bounced the 50, bounced to 61.8, again confirming both at the 50 and 61.8% retracements. Add half your position here, the other half right here, stop loss right below this low right here. And as you can see, price ended up pushing all the way into a high of 394.25. Looking at QQQ right here, I ended up taking the high point right here to the low point right here. So the opening high down to the daily low. As price pushed back into the 61.8, I have the 1 minute screenshot. You can see rejection, 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 giving you a short position, stop loss right above these highs right here, and price melted all the way back down into a low of 305 from around 307 with the stop loss set somewhere around like 307.2 to 307.3. Now, I also want to show you guys an example because I just taught a Fibonacci class in my mastermind the other night. Went through exactly everything that I look for in Fibonacci. That was a very, very fun class to teach. But I ended up going on TradingView yesterday, used the replay mode so I could show everybody an example. As you see, I took the low point right here, the lowest point of the day, up to the high point, the highest point of the day before price started pulling back. As you can see, price pulled down to the 61.8% retracement. It bounced and giving the entry long with a stop loss right down here. As you can see from there, price pushed into a new high a day and then all the way up into 4185.75. But that is going to wrap up this video on how to identify perfect entries using Fibonacci retracement. Again, if you guys do want more Fibonacci videos, make sure to smash that like button, comment down below letting me know that you want more. As always, everybody have an amazing rest of your day. Go out there and crush it with the fibs, and I will see you guys in the next video.